Welcome back to Investing Talk Podcast. Today, we're taking a focused look at Astera Labs, a company really seeing some significant growth in the tech sector.
Absolutely. The information we have, well, it paints a pretty compelling picture. This is a company that seems strategically positioned, right in the middle of some major technological advancements. We'll be looking at their financials, market analysis, industry views, trying to get a full picture.
Okay. And our goal today is pretty straightforward. Sift through all this, pull out the critical stuff. By the end, you should have a clear idea of what Astera Labs does, where they're heading, and, well, why you might want to pay attention. So let's jump right into the numbers, because that revenue growth, it really catches the eye immediately.
It certainly does. I mean, the reported revenue for Q1 fiscal 25 was $159.4 million.
Okay.
But it's the rate of growth that's really notable here. That's a 144% increase compared to last year.
144%. Wow.
Yeah, and even quarter over quarter, it's up 13%.
Yeah.
That kind of acceleration, it strongly suggests they're getting real traction in the market. Their solutions are being adopted quickly.
Right. And it's not just the top line, is it? Because high revenue is one thing, but making money is another. And we're seeing a big shift there, too.
Precisely. That's maybe even more impressive. They reported a net income of $31.8 million for the quarter.
Income. Okay.
And you have to remember, the same time last year, they had a net loss of $93 million.
That is quite a turnaround.
It's a dramatic swing. It really points towards, a significant improvement in their underlying financial health.
So what's driving this? What's the engine here? What exactly is Astera Labs' core business?
Fundamentally, they make semiconductor-based connectivity solutions.
Okay.
Their real focus is on the essential plumbing, if you will, for AI and cloud infrastructure. Think of it as building the super fast, efficient data highways needed inside these massive, complex systems.
Building the pathways.
Got it.
And they have specific products for that, right? I saw mentions of PCIe and Ethernet solutions.
Yes, exactly. Their key stuff includes PCIe scale-up interconnects. Those are vital for connecting processors and accelerators like GPUs with high bandwidth. Then there's Ethernet scale-out solutions, critical for building those huge networks and data centers. They also have their Scorpio fabric solutions. And importantly, their newer PCIe 6.0 portfolio. That includes Aries 6 retimers and a new PCIe 6.0 gearbox, specifically designed for GPU systems.
That sounds pretty critical, especially with all the demand for AI and GPUs right now.
It really is. That focus on GPU connectivity is very timely.
And it seems like it's more than just selling chips, right? They talk about an intelligent connectivity platform and Cosmos software.
Yes, and that's a really important part of their strategy, their potential edge. This platform, along with the Cosmos software, allows customers to build more adaptable and, crucially, software-defined infrastructures.
Meaning more flexibility.
More flexibility, more efficiency in managing these incredibly complex setups for AI and cloud. And their ability to work smoothly, interoperability with the big hyperscalers. That's a huge plus, as AI workloads just keep getting bigger and more demanding.
So they're in the semiconductor space, but they've really carved out a specific niche. I think one source called them a leader in purpose-built connectivity for AI and cloud.
That's a good way to put it. Purpose-built. It highlights their focus. They're not trying to be everything to everyone in the vast semiconductor world. They aim to be the leader in this specific high-growth segment. It lets them really tailor their tech.
Makes sense. Now, AI and cloud are obviously booming. That demand for processing power feels like a huge tailwind for them. But what about the other side? Potential risks, challenges.
You're right. The AI boom is definitely a major driver. But, the semiconductor industry moves incredibly fast. Technology changes constantly.
Right. Obsolescence is always a risk.
It is. So that means they need constant, heavy investment in R&D just to keep up, let alone lead. And we see that their R&D spending is up 21%.
Okay.
And then there are the usual potential headaches for this sector: supply chain issues, geopolitical stuff. Those can always pop up.
Okay, that makes sense. Let's talk about the people running the show. The sources mentioned CEO Jitendra Mohan, President and COO Sanjay Gajendra, and CFO Mike Tate. They seem pretty visible.
Yes, they've been front and center, particularly around the recent earnings calls. That suggests, stable leadership that's actively communicating its strategy. And they also recently added Dr. Craig Barrett to their board. He brings a lot of governance experience, which also signals a focus on building a strong foundation.
Good point. Okay, let's circle back to the financials a bit more. We talked growth and profitability, but what about the overall balance sheet? Liquidity, debt?
The picture there looks quite robust, actually. They're sitting on a lot of cash and marketable securities, over $924 million based on the report.
Wow, that's a solid cushion.
It is. Gives them a lot of flexibility. Plus, they generated positive cash flow from operations in Q1, about $10.5 million.
Okay.
And their gross profit margin is really high, around 76%.
76%. That's impressive. What does that suggest?
Well, it could point to strong pricing power in their niche, or maybe just really efficient operations. Maybe a mix of both. Either way, it's a very healthy sign.
Right.
And importantly, they hold more cash than debt. That means their balance sheet looks healthy, low leverage risk.
And investors seem to have noticed this, right? There was that stock jump after a Morgan Stanley upgrade.
That's correct. That upgrade, specifically citing their AI prospects, definitely boosted the stock. And then the strong Q1 earnings added to that positive feeling.
Although, I think I saw there was some pullback after the earnings.
There was, yeah. Some post-announcement profit-taking. That's not entirely unusual for high-growth stocks after a run-up, people locking in gains. But overall, analyst sentiment seems quite positive. Earnings estimates have been revised upwards, leading to that favorable SAX rank #2, which is a buy rating.
So if we zoom out a bit, how does Astrolab stack up against some of the bigger, more established semiconductor players, like, say, Broadcom or Marvell?
Well, compared to those giants, Astrolab's recent revenue growth is significantly higher, much faster.
Because of that focused niche.
Exactly. They're riding that specific wave of AI and cloud connectivity demand very effectively right now. Now, the bigger players, Broadcom, Marvell, they have much more diverse portfolios, longer track records of profitability across different cycles.
More established, perhaps safer bets in some ways?
Perhaps. But Astrolabs is really capitalizing hard on this specific, rapidly expanding market segment. It's a different kind of story.
Okay. Looking forward then, what are the potential catalysts? What could keep this momentum going?
A big one is the continued ramp-up of their PCIe Gen 6 products. As those get adopted more widely, that should drive significant revenue.
The next generation stuff.
Right, and also their expansion into designs for these big GPU-based rack-scale systems. I think things aligned with NVIDIA's Blackwell platform, that's a huge opportunity.
Tapping directly into the core AI infrastructure build-out.
Precisely. They're positioning themselves right where the demand is growing fastest. Of course, the usual caveats apply. Tech sector volatility is always there, and competition could definitely heat up as this market gets bigger.
Now, there were a couple of, let's say, points of caution mentioned in the sources, too. One was something about a material weakness in internal controls.
Yes, that was disclosed. A material weakness in internal controls over financial reporting. That's definitely something investors need to be aware of.
What does that mean, practically?
It means there's a flaw in their process that could potentially lead to errors in their financial statements. It's serious. However, it's also crucial that management acknowledged it and reported they are actively working on fixing it. Remediation efforts are underway.
So, something to watch.
Definitely something to monitor how effectively and quickly they address that. And the other point, as we touched on, was that stock price dip after strong earnings. It could just be profit-taking, but it might also signal some investor concern about valuation after the run-up. Is it getting too expensive?
Right. So bringing it all together then, what's the main takeaway for someone listening to this?
I think what really stands out is this combination. You have truly impressive financial performance, that rapid growth, the swing to profitability happening at the same time as they're strategically positioned right in the sweet spot of AI and cloud infrastructure development. They seem to have found a really valuable niche, and importantly, they're executing well within it, based on these results.
It really feels like a company whose fortunes are tied very closely to these massive tech trends shaping everything right now. That specialization in high-speed connectivity is clearly paying off.
Absolutely. And if you think about the bigger picture, that demand for ever more powerful AI, it's probably not slowing down anytime soon, which in turn likely fuels the need for exactly the kind of advanced interconnects Astrolabs makes.
So key things to watch going forward would be their continued execution, especially getting those Gen 6 products out the door.
Oh, and definitely their progress
Yeah.
on fixing that internal control issue.
Yeah.
Maintaining their competitive edge as others potentially eye this market too.
Okay. Well, this exploration definitely gives you a solid foundation for understanding Astrolab's recent performance and their potential path forward based on the information available. For those of you who want to dig even deeper, the sources we use, check out their investor relations site, their SEC filings. Those are great places to start. Thanks for joining us for this focus analysis. If you found this informative, please do subscribe, like, and maybe leave a comment. It genuinely helps us bring you more explorations like this one.
And perhaps something for you to think about. Given Astrolab's current position powering AI infrastructure, how might their trajectory change as AI moves from massive data centers, potentially closer to the edge, into more devices? It's an interesting question for the future.